Whether one of them sneezes, the rest of the world probably will catch a cold. China's economic growth collapsed to just 4.7%, which we would love to have year over year in the second quarter, missing all but one economist's forecast says the world's second largest economy is slowly but surely grinding to a halt. Now, absent a bazooka stimulus, it could be here for a while. Now, GDP, which rose 5.3% in the first quarter and had been expected to rise 5.1% based on economists polled by Bloomberg, instead, that growth slumped to that number, just 4.7%, which is the lowest growth since March of 2023. Now, China has grappled with weak consumer demand and a prolonged property slowdown, prompting greater intervention from policymakers in recent months. But in the absence of a bazooka stimulus, both fiscal and monetary, it is unlikely that anything will change, and growth will continue to cool quarter after quarter until there is a brutal recession or, God forbid, some civil unrest. Now, what does a weak China mean to the U.S. economy? Well, take notice of this. New home prices in China fell almost 5% year over year last month. That's the fastest pace of a decline in 9 years, according to Bloomberg calculations. New construction starts and property investments were down 23.7% and 10% respectively in the first half of this year. Is this temporary? Well, what should U.S. investors look out for? My next guest may have some of these answers. He's got a lot of experience there. Please welcome to the show, Keith Fitz-Gerald. Keith, unbeknownst to me, I picked the right guy for this story. What are your thoughts here?
Well, two things. Bloomberg and all these other guys that are railing about this in the West are making a classic mistake. China's economy works very differently than ours does. So it's a mistake to apply Western metrics to their economy and think you're going to get the same results. Now, that said, the situation is very serious, Scott. So we do want to pay attention.
All right. So it's not just finance. We also have some folks that dial in from rural America. We haven't really seen the exports to China like we normally would. Is that going to be something that they're just penalizing us for because of bad relations, or is it because they don't have any money?
That's the issue. And there's actually a third thing that nobody's talking about in the United States that I've seen yet. But let me tell you what I think is really going on. Beijing has had it with America. They want to prioritize control and discipline over imports and exports because the one thing the Communist Party wants is to stay in power above all else. So what they're going to do is they're going to penalize those countries that are exporting to China. Because the nefarious plan is they want to have the Chinese government ride to the Chinese consumers' rescue using Chinese products. So they're trying to build up their own network. That's the real danger here in the global markets.
A lot of the wealth effect there has derived from their recent run-up over the last 10 or 15 years, I think, from the housing market, right? I was there in 2019 while COVID was going on, unbeknownst to me, for 10 days. And and as you mentioned, you have to have these people walk around with you, right? You have to be escorted almost. But when they got away from the people that they were worried about speaking in front of, they did mention to me that, yeah, a lot of the Chinese wealth is built up in what these people have in, say, home equity and the price of their homes. Now, it came off precipitously just recently here. That could be a problem if we start to see that really start to roll over, because we've had some big property funds go out of business there, too, haven't we?
Well, we have, but again, the difference in the banking system there is very different than it is here. They've only got 3 or 4 externally facing banks that do business globally. Everybody else is focused internally. What Beijing wants is to stop the speculation. They want to drive down those values in much the same way Powell wants to drive down our economy to control inflation. And again, but in their mind, control civil disobedience, the possibility of how their economy moves and is directed. So, again, yeah, big concerns, rightfully so. But the diminished value doesn't diminish the activity, and that's the distinguishing factor here.
All right, so real quick, what does an American, U.S. investor look for or do? Is this something we bide our time with, or are there opportunities?
Bide your time. I think there are opportunities, but they're going to be Chinese companies that you want to invest because of China, not necessarily in China, with the exception of something like BYD, which clearly has global implications and aspirations, and is taking a playbook right from the Japanese car manufacturers in the 1960s before they rose to global prominence.
All right, my last question is kind of a big one. We only have 60 seconds, though. A lot of Chinese companies are represented on our stock markets here, but they don't have to adhere to a lot of the regulations that a lot of the U.S. stocks have to adhere that are on these stock markets as well. There's a push maybe to divest ourselves from those companies, or at least stop having public funds invest in them. Where do you stand on that?
Well, that's a very real concern because in China, you've got three sets of books. You've got the public books, the private books, and the real books. And their accounting standards are very different from our own. So generally speaking, and with very few exceptions, again, I'm not going to touch Chinese stocks unless I know they've got a global perspective in real accounting.
That makes sense. So for that, they're listed on other exchanges around the world. There's a lot of other people in the room with you. So you're not just the only you're not a pioneer. And as I said, my father used to say, I don't want to be a pioneer. My definition of a pioneer is a guy on a coonskin cap, face down in a puddle of water with an arrow in his back. So that's a pioneer. We want to be like the third guy there. Anyway, appreciate that stuff. It's great. I don't know how that came up. Anyway, thank you very much, Keith. Keith Fitz-Gerald